The data, I think, Paul, is was more or less what a lot of people had expected. Kudos to our colleagues over at Bloomberg Economics who saw a number very similar to this, negative 818,000 for the revisions. Keep in mind, this is old. This is going to be revised again, and also it's not information that's new, right? So if we think about all that this means is that, yes, the data was weaker and the economy was weaker between April of 2023 and March of 2024. That doesn't necessarily tell us where we are now or where we're going over the next couple of quarters. And but it does show that maybe things weren't quite as rosy as the preliminary data suggested.
And Ira, I'm glad you brought that up, because Paul and I were talking about a story I wrote ahead of that data, and it was just to that point where options traders weren't pricing in a big swing because they really saw this as backward looking, as basically a non-event for the stock market. We were seeing the S&P 500 still higher this morning. But when it comes to the bond side of things that you focus on, what is speculative positioning telling us in the bond market ahead of Powell speaking at Jackson Hole on Friday?
Yeah, I don't think the positioning really hasn't changed a whole ton over the last couple of months. And, speculators are still relatively, less short than they used to be, but they're still generally short rates. But that's because, real money investors are long, right? So for every long, there's a short in futures positioning. So you have to keep that in mind. And a lot of those shorts are going to be against other things, right? So people who are long credit or people who are trying to delta hedge options positions, for example. So all of those things go into some of that futures positioning. So you can't take as much away from that one data set as you can from, say, just the incoming data that we get. In terms of Jackson Hole, I think that the one thing that this data that we received just a couple of minutes ago does suggest is that that the Fed has more ammunition to cut interest rates. People who are worried about them cutting 25 or 50, the market kind of is now back in terms of the first cut being maybe 25 basis points, but this does give them some ammunition because they can say, oh well, the economy is not as strong as we had thought, and because of that, that gives us at least a little bit of comfort in the fact that we can slowly start to reduce the amount of monetary tightening that we've done.